Namaskar from the CNBC TV18 eBix Cash studio. I'm Sonal Bhutra and with me is Reema Tendulkar. Well, it looks like a down day. The Nifty is down around 1% as we speak. We did see some recovery from the lows, but that is that. It is still down 200 points in the red. The Bank Nifty is down around 0.7% as we speak, and the pressure is really coming in from the IT pack. So that is the top loser as far as sectoral indices are concerned. The mid-cap index down 0.6%, slightly outperforming the benchmarks, but nothing big positive coming out there as well. The advance decline ratio is in the favor of declines as we speak. Hi Reema, good afternoon.
Hi, good afternoon. I was just taking a look at Sterlite Technologies numbers. Prima facie, it looks like a big miss. A revenue growth of just 3.1% and EBITDA loss of 50 crores is what the company has reported. And that is resulting in a big bottom line loss as well. And the stock is selling off. So we'll try and get more details on that. But just, talking about the mid-cap earnings which have come through from Sterlite Tech with a net loss of 137 crores, it does look like a bit of a miss. We'll try and find out if there are any one-offs in the numbers. Let's first run you through the top stories that we're tracking at 1:30 p.m. The street is awash with red after an overnight sell-off in US sparked by rising rate hike fears. IT realty stocks bear the brunt of the selling. Oil and gas and auto stocks gain in trade.
Reliance Jio prepays 30,791 crore of debt to DOT towards deferred spectrum liabilities, resulting in annual cost savings of 1,200 crore rupees. Jio also emerges the biggest fixed broadband player in the country.
Bajaj Finance gets back on the growth path, posting its best margin in a year, with the stock dips in profit-taking. ICICI Prudential Life Insurance slides on fears of rising risks on lower reinsurance despite healthy numbers.
Tata Elxsi hits a new high after it posts a heady 33% revenue growth, but L&T Technologies falls on failing to meet street expectations.
Okay, let's straight away dive in and invite the first management joining us on the show, and that is Prachur Sah, the CEO of Cairn Oil and Gas. He joins us to talk about what the oil and gas industry is expecting from the budget this time. Mr. Sah, afternoon, and thanks so much for joining in. That is the first question then. What is your ask from the government and what can we realistically expect?
Good afternoon. See, more than the ask from the government, I think the important thing is to understand is that coming in the next year, domestic oil and gas production is going to remain a key driver for the economy, given where the oil prices are. So whatever we can do in terms of increasing our domestic production will go a long way in terms of providing the required support to the economy. So the expectation still remains that, we are currently producing we're currently importing 87% of our oil and gas. So the whole idea is how the investment in the domestic oil and gas industry can be boosted. Currently 90% of countries' domestic production is actually coming from the pre-NELC blocks, right? Which are, the producing fields. And as these fields have been producing and mature, they require a larger amount of capex investment to deliver more projects. And to make these projects more viable, looking at the duties or the levies that we pay in these blocks, which is close to the range of 70%. So whatever can be done to bring it to the global benchmark, which is around 30 to 35%, will unlock a significant amount of investment into these fields, which can add to domestic production in a very short time frame. And why we feel positive, that's going to impact positively the entire domestic production sector is, recently in one of the meetings, Prime Minister had mentioned that the government is going to bring changes which are more production-minded than revenue-minded. So we look forward for these changes that can really boost the domestic production.
Okay. Mr. Sah, good afternoon. Interesting you speak about production because that has been a pain point for a long time for the industry. But pricing, that has definitely improved in last 1 year. Something so different from what we saw in 2020 when the pandemic just started. Back then, gas prices had fallen substantially and the ask of the sector was that there should be a floor pricing or the benchmarking should be different, it should be higher, or there should be a premium that should be given as far as the domestic gas pricing formula is concerned. Does that ask still make sense considering how gas prices have moved higher now?
See, I think gas prices is one part. The second part is how we can compete with the import prices. So, for instance, if I talk about the crude prices import, so currently due to the CST and VAT that we are paying, we are currently bearing the burden of 3% extra on our crude oil sales. So the whole idea, and this is not borne by the import crude. So the whole idea is that as domestic producers, if we can get the import parity prices that we are, and we can compete with the international markets in terms of pricing, that can bring a significant amount of investment for the oil and gas upstream sector that can increase production, right? I think what has achieved, there have been a lot of good things done in the gas side where the marketing freedom has been provided in gas and we are able to auction our gas and get competitive rates. I think a similar thing could be done for oil as well, so that we can get the same level of pricing that the import that we are currently giving as imports. That could definitely give a lot of boost to the private domestic players in terms of increasing their production.
What is your own expectation of production for KN now for this year and FY23?
See, FY20, currently we are producing about 160,000 barrels per day, right? And our expectation is in FY23, we are planning to invest significantly in our existing blocks and in our new exploration blocks as well. Our overall vision, right, for KN is to reach 500,000 barrels a day production. And for that, there are 3 or 4 key levers. As I mentioned to you, invest in our existing pre-nel blocks where we can increase our production through enhanced recovery. We have a significant portfolio in our existing blocks as far as unconventional and shale is concerned. So we have recently got into partnerships with international technology companies to come and invest and explore shale. And if successful, that could potentially transform the complete oil and gas landscape of India in terms of production. And thirdly, our continuous investment in exploration, both in our existing fields and the new blocks that we have seen. So in the short term, we want to reach to 300,000, but the eventual aspiration is to get to 500,000 if we are enabled through these policy changes and our continuous drive to invest. As we have already informed, we are planning to invest close to $4 to $5 billion in oil and gas over the next 2 to 3 years to get to these production levels.
Okay, all right, Mr. Saha, thank you so much for joining us. It was a pleasure speaking with you. So that's the budget wish list as far as the oil and gas sector is concerned. More impetus on production and investment is required. With that, we'll slip into a short break now. We will connect with Mr. Manish Dapkara, who is the CMD and CEO of AKI Energy Services, to talk about the business.